I welcome everyone to today's session. Let me know where you're watching from in the comment section. Let me know where you're watching from in the live chat. Let me know where you're watching from in the live chat. Alright, I want to welcome each and every one of you to yet another live trading session where we focus on technical analysis using price action. So, a quick information. We need to understand that leverage trading involves risk, so trade responsibly. Regional restrictions applies, so you can check our terms and conditions to see if your region has been is under the regional restriction. And this webinar is for educational purpose only, not financial advice. And it's important to know that past performance is not indicative of future results. Now, a quick one. My name is Tunmise Olaoluwa, and I have 7 years experience trading in the Forex and the crypto market. I have a solid background in finance and quantitative research. My trading result has been consistently profitable across various strategies. I frequently trade price action, momentum, trend, candlestick patterns, primarily focusing on EURUSD, GBP USD, and USD JPY. So in today's agenda, we will be discussing the use of top to bottom strategy. We will review the EURUSD currency pair. We will review the price movement of EURUSD. We will equally review any currency suggested by the audience. And most importantly, we attend to the questions and answers. Now, this session is going to last for 45 minutes. Use the YouTube live chat to ask your question during the webinar, and I will periodically check to answer your questions. Now, our strategy will focus on analyzing historical price movement, utilizing candlestick formation, chart patterns, and market structures. Now, what kind of traders is this suitable for? This is suitable for position traders, intraday traders, and swing traders. Now, when should this strategy be used? It should be used during a high liquidity period, time frame from the 1 hour time frame to the monthly time frame. All right. Now, so let's go straight to the live trading session. Okay, so we are starting with the EURUSD, and our strategy today is a top to bottom approach. So we are going to we're going to use the monthly time frame. I will start from the monthly time frame. So one important thing we are going to do during this session, as we start, is to map out key levels of support and resistance that helps us identify the market structure likewise. So here we come and map out key levels of support and resistance. Key levels of support and resistance. key levels of support and resistance. Right, here we go. Okay, so I believe you can see how I am mapping out those levels. And one interesting thing is this: as I map out these levels, you begin to see like some key levels begin to become very obvious to you, right? After we've, you know, mapped out this chart to identify, you know, the level of support and resistance. For those persons who might not know what support and resistance are, so this level here is our support level. All right, so let me push this. These are support level, okay, and this level here is our resistance level. So the level up here is our resistance level. So when price gets to up, it gets pushed back. So that's our resistance level. This level also is a resistance level, right? So here it was a support level, here it has turned resistance level. Now we would see the reason why, you know, why it turned resistance level. So here we can see that, let me pick. Okay, so here we can see how price moved up, came down here, but there was a support level here that prevented price from falling further. Price went up, came down again to test that level. That support level held strong. Okay, price went up again, pushed down further, and the support level still held strong. Price went up here and pushed down to the support level again. Interestingly, this time the support level couldn't hold as strong as the last 3 times when it held strong, right? And we can see a breakout at this level. So a breakout occurred and a consolidated market. Then price went back to that support level, okay, and the support level had now turned resistance zone, okay, and now is now preventing price from breaking upwards. So price went down further and went back up to that same support turned resistance level now, and that resistance still held strong, preventing price from breaking up further, and price went down, okay, rallied and consolidated at the support level, okay, the new support level, and now we can see a upward momentum coming in, and here is where our price is current now. So what we want to do is to analyze the chart, analyze the historical price, and forecast the future of price movement. Okay, now here we can see that price created a new support level here. So let's mark it so that we all can see. Yeah, so price created a new support level here that has been pushing price back up anytime it comes to the support level. All right, so if you have any question please do well to ask in the chat as we go on. Okay, so this is what we have in the smaller in the higher time frame, this monthly time frame. Now we can see here now, because when we now looking closely to say, okay, let's look at the most recent times. All right, now we can see here how price has been consolidating at this level. So let me yeah, we can see how price has been consolidating. You can see how price has been consolidating at this level. All right, and a breakout occurred outside this consolidation. Now the interesting thing, why you need to pay attention, why you need to pay attention here, is the fact that this consolidation took 2 to 3 years. So we have 2022, the consolidation started in 2022, and lasted up until 2025. And at 2025, an interesting thing happened, that price broke out of this consolidation. Price broke out of this what? Consolidation. Or we can call it ranging market. Can call it consolidation or ranging market. So this is the consolidation. This ranging market is what we call the consolidation or the ranging market. If you have any question, please do well to drop it in the chat box. So this is where we call the consolidating market. Now what happens now? Why is this significant? Because after consolidating for 2 years, 2022 to 2025, okay, it then broke out of this level. It then broke out of this level. So it broke out of the range, the ranging market. And we can see the buy momentum. So we are going to go to the, now that we've established that prior to the breakout, there was a ranging market in the monthly time frame. After the ranging market, the breakout happened outside the ranging market. Okay, and now price is above the ranging market. So we are going to go down to the weekly time frame. Now you can see it's becoming a more interesting chart for us to see. I'm just going to take this off. Okay. I'm going to make this more transparent for us. Okay, cool. So there was a ranging market as price goes up, comes down, goes up, comes down. And so we see price go up here, come down, you know, in this ranging market. Okay. And now price came here, went up, all right, came down. Now this is the next level. This is where I see price going next. All right, that's where I see price going next. Okay, that is where I see price going next. Yeah. Now this is, if you are a swing trader, this would be more like a very clean spot for you. Why? Because a confirmation has already occurred. A confirmation has already occurred. So a breakout has happened. Okay, a breakout has happened. A pullback took place. Not just a pullback, right? Not just a pullback. Okay, not just a pullback. Now we can equally see that at this level here, yeah, I want to make it bolder and bigger. Okay, good. We can equally see that at this level here, who can tell me the type of candlestick here? The type of candlestick that showed up at this breakout point and at this resistance zone. What kind of candlestick is this? Okay, what kind of candlestick is this? Who can tell me? What kind of candlestick can you see? Who can tell me? I need someone to tell me. What kind of candlestick can you see? What kind of candlestick can you see? What kind of candlestick can you see? All right. Abdul Samond, what kind of candlestick can you see? If you are watching this, what kind of candlestick can you see? I need an answer and then we move forward. Who is going? Who is going? I want to be sure that you are here. Let's make this an interactive session. What kind of candlestick can you see? I'm waiting. I'm waiting. What kind of candlestick is this? The one I put in a box. What kind of candlestick can you see? Okay, what kind of candlestick can you see? Yeah, who's going? All right, so while I wait for your answers, let me just give you an inspo. All right, so this candlestick gives an indication of market reversal. This candlestick gives an indication of market reversal. And when it appears on a support level, on a resistance level, it can indicate a continuous movement in price. So this is a doji. Right? This is a doji. So when you see a doji appears on a support zone, so after a consistent downward movement, price breaks out and then it appears on a support zone, then we just get to know that price would most likely continue going higher. So there's a higher probability that price would continue going higher when you see a doji, at a support zone. So because this resistance zone now has turned support, and with this confirmation of a pullback and a continuous move in price is a confirmation of a buy. It's a confirmation of a strong buy. It's a confirmation of a strong buy on EURUSD. It's a confirmation on a strong buy on EURUSD. Yes. Now I see your response. Emeka, 3 candle confirmation. Other person said doji. Yeah, doji. So when you see a doji appear on the support zone after a breakout, then that is a strong buy. Now you can now see the candlestick confirmation that followed after that, the fully bodied candle that followed after and closed above the doji. Now this is a strong buy. The likelihood of the probability of making profit on this trade is higher, okay, because of the confirmation we have here. This is a strong confirmation. But however, this does not mean that you would not implement risk management, because in the financial market, all things being equal, all right, anything can happen. There can be a news, fundamental news, an influence that can drastically change the market. So we need to be very, very cautious and implement risk management. Okay, yeah, Emeka, thank you for your response. Srina, thank you for your response. And I really want to see more of your response as we go on. So if you are a swing trader, then you are looking to swing on a buy. All right, so let's go down to the daily time frame. Let's go down to the daily time frame. So this is the daily time frame. So it's already clear to us what we can see here when we say a pullback occurred. After a breakout, a pullback occurred, and then we can see price going higher. So from the weekly time frame, we already declared that this is a buy. We already declared this is a buy. All right, very important. Already declared this is a buy. Okay, someone said, good question. Do I buy immediately or wait for price to reach the doji level? Do I buy immediately? Let's go back to the weekly time frame. Or wait for price to reach doji level. So you don't need to wait for price to reach the doji level, right? You can decide to buy at this level. You can decide to buy below the current candlestick. You can decide to buy above the current candlestick. So now that we have gone to the daily time frame now, we can see more clearly price volatility. Okay? We can see more clearly price volatility. And so here, you can decide to buy above the current candlestick, and you can decide to buy below the current candlestick. So anywhere you decide to buy, there's a higher probability, right, that you would be in profit. There's a higher likelihood because we have a setup already. 1, a breakout, 2, a pullback, and 3, a fully bodied candle appearing after a doji, right? And that gives us a confirmation to buy. I don't know if that's clear. If you have any question, please do feel free to drop it in the chat box. So here we can see price, at this level. So let's go down to the 4 hours time frame. Let's go down to the 4 hours time frame. So so we can see that on the 4 hours time frame now, we can see more clearly the the volatility in price. So here we can see how price has been moving across. Okay, let me do this. Yeah, right. Can do something like this. Yeah, let me change this to a line chart to see clearly what. Oh yeah. Okay. Cool. Good. So let me take this off so we can see the reality of things. Good. So here we can see how price has been moving and climbing upwards, right? And if you see here, price comes down, goes up, comes down, goes up, comes down, goes up, comes down, and then that is the likelihood of what will happen, and then goes up. So you can decide to buy at this level. You can decide to buy at this level if it comes down further, and you can decide to buy at this level. All right, your target level is clear, and your target level is here. This is your target level. Interesting, right? This is your target level. So you can decide if you want to ride along up to your target level with proper risk management. Like I mentioned, proper risk management. Okay, you can decide to ride along up to this level. So there is a high likelihood of a buy from all indication on EURUSD. If we go down to the 1 hour time frame, so let's see more clearly what price is doing here. All right, so we can see here how So we can see that how price has been following this trend line, and then with the push up. All right. So on EURUSD, it's a buy. Okay. We implement proper risk management, which is very, very important, because all things being equal, we also want to mitigate against any form of risk. If you want me to analyze any currency or any currency, drop it in the comment section. So if you have any currency you want me to analyze, drop it in the comment section. All right. If you have any currency you want me to analyze, drop it in the chat box. Okay. If there's any currency you want me to analyze, drop it in the chat box. I'm waiting. If there's any currency you want me to analyze, drop it in the chat box. If there's any currency you want me to analyze, drop it in the chat box. If there's any currency you want me to analyze, drop it in the chat box. Is there any currency you want me to analyze? Drop it in the chat box. Okay? If there's any currency you want me to analyze, drop it in the chat box. Okay, I'm waiting. If there's any currency you want me to analyze, drop it in chat. All right, since let me continue and we look at USD. Okay, let's look at something different. Let's look at Euro. No, we've looked at Euro. Let's look at USD JPY. Okay, someone wants us to look at GBP USD. Another wants us to look at gold. Okay, which do we look at? All right, let's see if we can do GBP USD. Okay, so here we go to the monthly time frame. All right, I'll do a quick run through the market. So we have this year, so I'm mapping out levels of support and resistance, which is very, very important when it comes to understanding the market structure. So, okay, I have 3 votes on gold. All right, so let's look at gold so that we don't. It's based on the popular XAUD USD. Okay, so let's look at gold based on popular opinion. All right, so here we are going to analyze gold. Let's map out levels of support and resistance on gold. Levels of support and resistance. Okay, we can do here. Yeah, here is a level of support and resistance. Here is another level of support and resistance. Here is another level of support and resistance. All right, so now we need to, because what has been happening on gold has been a macroeconomic factor where there is an increase desire to move assets into gold to protect against inflation. All right, so that is why we can see that gold has been on a steroid move to the upside. All right, and here now we have to, because here, okay, so let's map out this level now is now a level of support and resistance. Let me change it to a line chart so that I can see the direct level of contour. All right, level of contour here. Okay, here is set, here is okay. So let's go back to the candlestick chart. So yes, this is a level of resistance, this is a level of support, this is a level of resistance. All right, this is a level of resistance, this is a level of support. Okay, now to get more clear picture here, we can equally, by looking at this, we can say, okay, gold might retest to $2,000. Okay, gold might retest to $2,000, but how sure are we that it would most likely get there? That's the question, right? Good. Given the high volatility in gold, so we want to go down to the lower time frame to be able to see more clearly what price is doing, in each of those levels. So here we can see what is going on. So we can see how gold has been moving, break out from this level, went up, came down, went up here, came down a bit, went up, came down, went up, came down, and currently moving in a wave like, in a sideways, right? So currently price is moving in sideways here. So you can see price moving in sideways here. So let me just see here. Let me just map out this level so you can see. So price moving in sideways here. Price moved in sideways here. Price moved in sideways here. Okay. Price moved in sideways here. All right. So what do we observe after every sideways movement in gold, right? So after every sideways movement in gold, there's always a swing higher. There's always a swing higher. Okay? So what we might see going to come up here is any side movement down, then we might expect a further push in price on gold, right? And the next target for gold is $4,000 mark, right? That is the next target for gold if it swings higher than 3,300 where it's currently rallying, right? That's the current target for gold. And if gold would ever make a pullback, then the next touch point for gold would be the 2,600. So if gold is going to go up, it's going to touch the $4,000 mark. If gold is going to come down, it's going to touch the 2,630, price level. Okay, so how do we position ourselves better on gold? Understanding the volatility. So risk management becomes a priority when we are talking about gold. Okay, good. So here now we'll go down to, on this level, if we are going to look at the basis of how gold has been swinging high after every sideways movement, we might want to position for a buy by setting, by looking to buy above this level. So you are expecting that if gold comes outside this level and closes above it, then you are looking to buy. But if that's not the case, then you want to stay out of gold. All right, you want to stay out of gold. And if you are going to be trading gold, you need to have good capital to trade, gold. So let's go down to the daily time frame. So we can see that on the daily time frame now, price has been choppy. All right. So it's simple, right? It's simple. Now the probability of gold pushing high is higher based on the historical reactions or outcome after it breaks out of the ranging box, right? So any movement and breakout of this ranging box now, gold is going ahead to touch 4,000 USD. So for you to position for this, then you are waiting to see gold close above, 3,400. So if gold closes at 3,500, then you are good to buy. But if gold does not close above this level where it has previously gotten to initially, then you have to be careful trading it. All right. So outside that, gold is going higher, and risk management is also important to be implemented in your trading strategy when trading gold. It becomes a priority at this point. So now let's look at it from the lens of the 4 hours time frame. Now you can see clearly here now that gold has been creating a lower low, right? So when we talk about lower low, this is what we mean. I'm sorry, a higher low, right? So here is a high and here is a low. So this is a higher low, and now this low here now becomes a high if a new low is created. So this is a high and this is another low, because now this is lower. This level where price closed is lower than this previous level where price closed. So this previous level where price closed is now the high, and this current level is now the low. So we can see price already creating lower, creating higher lows, right? What we call higher lows. Okay, price creating higher lows at these levels. Okay, now when we now also look at it with the trend line, okay, we can see that price is creating higher lows. Now what's this telling us? Now that there is a probability that gold is still not done, pulling back. All right, gold is still not done pulling back. So at this point, you as a trader have to be very, very careful trading it. So now gold needs to break out of this trend line to be able to achieve this $4,000 mark. Okay, gold needs to break out of this trend line and push up outside this 3,500 level before we can say, okay, yes, there is a clear upside momentum coming in. I hope that's clear, right? So on gold, you have to wait for this catalyst that I've mentioned. All right, good. So we have come to the end of today's session, and quickly I will need to walk you through some practical implementations when it comes to risk management. All right, now risk management, if you are a total newbie, you are just starting, I recommend you start with a demo account where you practice trading with virtual money on the Octa FX platform to understand the market and your strategy. And if you are an experienced trader or you've been trading, it's also important that you implement the use of stop loss order when trading. Okay, very, very important. And also you trade with a risk to reward ratio, and you have to aim for a minimum of 1:2. So you are willing to lose at least 1% and reward and target at least 2% reward, right? Now you also need to risk only a small percentage per trade, right? So you have to limit your risk. Very, very important. Diversify your trades. So don't put all your eggs in one basket. It's important that you diversify your trade, avoid over trading, use leverage cautiously. All right, stick to your trading plan. It's important you have a trading plan. One other thing is this: as a trader, you have to keep up with the market news. It's very, very important, and avoid over trading. Avoid over trading. When you implement a particular strategy, also look at adjusting that strategy regularly until you achieve a performance that you prefer. Now, one important thing is that Octa is available on the Google Play Store and also on the Apple Store. It's important that you know that our customer care is 24/7. We have various educational resources, and our trading instrument platform is fast. We have fast execution, low spread, zero commission, and you can be sure that we have a strong commitment to your fund and data security. There's an offer for you. We have a promo code Tunmise 100. And how do you activate this promo code? You activate it in just 5 steps. Open the Octa trading app, visit our official site, go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy your bonus. All right. Now, one important thing you need to do for us right now is we value your feedback. Please take a moment